Wall Street is telling you the economy is strong. They're pointing to the recent rally and telling you everything is fine. But look closely at what the Federal Reserve just did in December. The Fed didn't just cut rates again, it quietly ended quantitative tightening. They explicitly switched from draining money to printing money to buy Treasury bills. They are telling you they're saving the labor market. But that is a lie. It's not because they've beaten inflation. Inflation actually ticked up to 3% recently. It's because the US financial system is out of cash. Let me break it down. The system relies on two hidden lifelines to prevent a 2008-style collapse. Both are now flashing red. Lifeline One is bank reserves held at the Fed. Think of this as the insurance money every bank must keep for an emergency, like a massive bank run. For 2 years, the Fed drained this account. On December 10, 2025, the Fed admitted these reserves had fallen to ample levels. Fed speak for dangerously low. That is why they just panicked and announced they are buying billions in Treasury bills. They are desperately trying to refill the tank before it runs dry. But here's the kicker. Lifeline Two is the overnight reverse repo facility. Think of it as Wall Street's giant emergency cash jar. Back in 2023, this jar held over $2.5 trillion in cash. It was the ultimate safety net. Whenever the system needed liquidity, the Fed drained this jar to keep things floating. Today, that massive cash jar is effectively drained. Buffer's gone. So what does this mean? It means the safety nets are gone, the insurance fund is hitting the danger zone, and the emergency cash jar is empty. When the next shock hits, a commercial real estate collapse, a bond market spike, or another bank failure, there is no buffer left to absorb it. The Fed knows this. They didn't stop tightening because they won the economic war. They stopped because something broke. They are out of ammunition, and they are terrified of what happens next. A liquidity crisis is no longer a risk. It has already started. So what can you do to protect your wealth before the next shoe drops? Comment if you want to find out. Follow or subscribe to this channel and stick with us. We'll show you exactly how to navigate what's coming.